Well, I'd like to welcome everyone to our first educational video or office hours. There's just a lot of presentations and a lot of information that we disseminate to clients during our client meetings, and we want to take the opportunity to record a video that just has some of the basics that we end up going through with clients on a fairly regular basis. This is going to be a couple of things. It'll be a tool that all of our staff can use in answering questions. It's also going to become a resource for clients over time, where we're going to add them into a database. So with that, today we're going to talk about the blueprint for financial success. This is basically every financial plan, whether you own a business, whether you are a small, just a family, a small individual, anyone's finances has the same key characteristics involved in it. And so one of the ways that we use to explain that to clients is this visual of a blueprint for financial success. And that's what we're going to go through today for our presentation. So I've worked construction before, not a whole lot. I wouldn't say that I'm an expert, but during the construction process, one of the things you learn is that you don't want to start putting the expensive part, the finishes of a home. I worked for a cabinet shop actually for my uncle for a while, and cabinets are one of the last things to come in, like cabinets and flooring. And one of the first things that happens when you finish a home or when you're building a home is you finish the roof or the rough in the exterior of the home, the tool or the thing that's going to give the home protection. And that's going to be the thing that protects you and your family, and everything that you have is that protection, that roof, that shelter, right? So when we were working in a cabinet shop, we're the last ones in there. We'd install the cabinets, and they're beautiful, and that's kind of the finishing touches, is the cabinets and countertops, and even after paint and things like that, right? So whenever you have a financial plan or a picture, something that you're wanting to accomplish financially, and we're talking more specifically of a broad financial plan, you're going to want to have the aspects of protection in place. So we'll dive into those a little bit later, because those aren't the exciting things. Those aren't the sexy things. But we put the roof on first because it's important that you have a plan to protect against the unexpected, right? Those unexpected things that come in life. But the thing that really drives your finances is you, the income that you make, right? There's some people say that you're the money machine. As long as you're up and running, money's being created, wealth is being created, or the opportunity to create wealth can occur. So part of everyone's financial plan is going to be them, that financial engine, the things that they're doing to create wealth. One of the other pieces of everyone's financial picture is taxes. Okay. I have lots of conversations with lots of clients with diverse backgrounds, and we may disagree on a lot of things, but I've never found anyone who didn't agree that taxes is one thing that the government is very good at collecting. And so we need to acknowledge that that's a part that we need to address in everyone's financial plan, whether you're running a business, whether you're an individual. Taxes needs to be part of your planning, and it's some of the planning, the parts of a plan that we create and work through with a client. So once you've got that engine, you generating money, you've paid taxes, you're left with a net income, the portion of money that you can use for whatever you'd like, right? Now, many of my clients come out of school because they're highly educated with some sort of student loan debt, whether that's a doctor, a dentist, an engineer, a CPA. They've gone and gotten advanced degrees, and with those advanced degrees oftentimes comes student debt. So debt is one of the things that you can spend that net income on, right? So you make money, taxes are going to come out, you're going to pay debt, and then you've got your spending. Living life, taking care of yourself, paying for food, for clothing, for entertainment, for trips, right? All of those things are going to come into the spending. And then the last category where money flows is into savings and investing. And that's the part that is more exciting for everyone to talk about, right? Building wealth. And that creation of wealth, or that building of wealth, comes in just keeping a portion of everything that you make. Okay. So you can be really, really good at earning money. In fact, I've met with and worked with individuals who make 7 figures in a year, and don't have very much in terms of wealth because all of their money goes to pay debt, right? It goes to taxes and it goes to a lavish lifestyle, and they never accumulate wealth. And so one of the things we focus on with client is a big piece of a blueprint for financial success is wealth accumulation. Now, we're going to talk about different places that you're going to accumulate wealth over time, and talk about a few different options, right? One of the questions I get all the time is, where should I put my money, right? So what should I do with it? I've got this money, where should it go? How should I invest it? How should it be growing, right? And so we often talk to clients about buckets. Now, whether those buckets represent time periods, money you're going to need in the next 1 to 5 years, 5 to 10, 6 to 10, 10 to 15, 15 plus, right? We talk about buckets there, but we'll also talk about buckets from a tax perspective, right? And so we're going to talk about different places to accumulate wealth and the pieces that everyone should acknowledge exist, and maybe look at how they're allocating their funds according to what we call a smart money list. Okay. Now, this smart money list might adjust just a little bit depending upon your income and your priorities, right? And your situation. None of these answers, none of these pieces or blueprint, we're not going to get into specifics on how much you should put in each different section, right? I'm not even going to get into specifics right now of how much you should be saving. A general rule, though, I will say is, you're not saving at least 10% into this accumulation, you're not saving enough. You're not investing enough. You're not building wealth, right? You have a risk of making a lot of money and having it all leave and flow out of your house and through expenses. But for most people, following this smart money list is going to be what we would recommend in a sequence of places to accumulate wealth. The first thing is ensuring that everyone has an emergency savings fund, right? Now, this can be at your bank, this can be in CDs, it can be in money market. The key with emergency savings is, if something unexpected happens, right? Hurricane, and the roof blows off, right? You may have a deductible that's going to protect and rebuild your house, but that deductible might be $5,000 to rebuild a roof, right? So in Utah, the risk of earthquakes is a big deal. And so I've got earthquake coverage on my home, and my deductible for that specific earthquake coverage is 10% of the cost to rebuild that home. So if that's a $30,000 or $300,000 complete rebuild, I've got to come up with $30,000 in order to pay that deductible, in order to float that gap from between what I'm responsible for and where other plans kick in. Okay, so an emergency savings, it can help with a job change. This can help with car repairs, home repairs, whatever it may be, just things that are unexpected. Okay, so that's the first place that you need to accumulate and set aside some funds. The next is going to be anywhere you can get free money. I joke with clients a lot that usually that's just an employer match, right? I put money in, my employer puts money in, they match that contribution that I have into usually a retirement plan, like a 401k or 403b. Okay, they'll match that. And so if I can put $1 in and they're going to put $1 in, that's 100% return on your money day one. That's free money, right? I kind of joke that, the other place might be taking your great Aunt Ingrid out for lunch often enough that she'll write you into her will, right? But really the only place for free money is through employer matches. So put your money in if you're going to get a match from an employer. That's the next priority. Now, many of my clients are business owners, and that's not an option. And so the next thing we look at is tax-free money. Where can I put my money that's going to shelter it from taxes forevermore? We're going to talk about in a future presentation about the risk of taxes increasing over time, or the impact that taxes have on someone's retirement. But ideally, if we can have a bucket, a sleeve, an account that's protecting money from taxes and the changes that are going to occur in taxes over time, that becomes an important piece of a tax diversification strategy and of a retirement plan, and of a general financial plan. The next category would be tax deferred, right? If you're making $400,000, $500,000 a year, your biggest expense oftentimes is Uncle Sam, right? How much you're paying to the government as this portion of taxes. And at that point, you may be in a position that your tax bracket down the road is going to be less than it is today. And so you'll save money in taxes by setting it aside in a tax deferred account. Okay. And often people stop there, but the other thing we want to talk to you about, and we'll do a presentation just on taxes, right? The different forms of taxes, income taxes and tax brackets and potential increases and how capital gains works. But there are really two different types of taxes that most people are going to deal with, right? Income taxes, right? And those brackets are 10, 12, 22, 24, 30, 34 and up, right? And then capital gain taxes. Those brackets are 0. People don't know that there's a 0% tax bracket in capital gains because there's an exclusion, right? A level at which you don't have to pay capital gains taxes. And then 15% is the most common, and then 20%, right? So there are those 3 brackets with capital gains. So you can diversify from taxes by having some money that's tax-free, right? In this category here, tax-free, some money that's tax deferred, kick the can down the road. Hopefully you're at a lower tax bracket, and then some that's subject to capital gains. So when you're accumulating wealth, you want to accumulate it based on not just, well, number one, and this doesn't necessarily fit in there, but number one, have emergency savings, have money set aside in case of emergency, and then go through and check these boxes. Do I have a chance for free money? Okay. Are there opportunities? Does it make sense for my current tax bracket, my tax situation, and what I want to accomplish to put some money aside on a tax-free basis? Can I save money now by doing tax deferred? And then how does this capital gains tax bracket or assets or income or source of funds and accumulation, how does that play into your specific plan? Okay, so we're not going to talk about specifics, how much, where you should put, who this works for, but just know you should be looking at each of those things as part of your foundation, part of the accumulation part. Okay, now I want to take a quick minute and revisit this protection piece, this big red roof that we have in here, because you can do a wonderful job creating wealth, earning money, right? Setting it aside, right? You'd be saving 20, 30, 40% of your income. Some of my clients are saving that much. But if something were to happen to them, say you're a surgeon, right? Or a dentist, and your ability to use this hand, these fingers, right? Had a client that once called me, says, hey, I smashed my hand unloading some pallets out of the back of my truck at the dump. Do I have disability insurance in place? Do I have enough? How much do I have? Right? That is an aspect of protecting you and that engine, that source of income that's coming in. Okay, so disability insurance is a piece. What happens if you become disabled? Do we have disability insurance? Do we need it? Do we have enough other resources that we don't need to worry about that? Do we have a plan there? Health insurance, right? I've had some major health issues in my life, and I'm grateful for having good health insurance. Because looking at the bills that the hospital wanted to charge versus what I actually had to pay, where health insurance kicked in, that could be a huge protector of wealth and of a financial plan. Life insurance, right? If you're the primary wage earner like I am for my family, if something were to happen to me, is my family going to be okay? Do we have enough life insurance to take care of the things that we feel are important, the goals, the priorities, the things that we value? Can that still happen if I'm not here? Something, heaven forbid, were to happen to me. Okay. As you get older, and you're planning retirement and income during retirement and taking care of yourself during retirement and how to use your assets, long-term care, having a plan for that. What assets are we going to use if we have to go to a nursing home? Who's going to take care of us? Do we have kids that are going to handle that? Are we going to outsource that completely to a nurse? Am I going to go to a nursing home? What's the long-term care plan? Does it make sense to get some protection pieces in place? And then making sure you have appropriate property and casualty insurance. Now, most of the time, this property and casualty insurance piece is kind of just a no-brainer. It's just set there. However, I will say for most people who accumulate significant wealth, they need to look at an umbrella policy on top of the property and casualty insurance that they have, right? Your car insurance, your homeowner's insurance, your business insurance, all those liability insurances. Is there an umbrella policy that's going to come in? And if those numbers get capped out, because that can happen really quickly, if those numbers get capped out, that all of my other assets are protected under this umbrella that increases those limits and takes care of me, right? So as you're going through and creating your financial plan, make sure that you've addressed and been honest with yourself about these issues, right? Unfortunately, they're not fun topics to talk about. They're not easy topics to talk about. It's not easy to address our own mortality and the fact that we're really not in control of a lot of the things that impact our life and our family's lives financially. So be candid, talk with me, walk through it. Let's make sure you've got a plan. Let's make sure you're covered in the protection piece. Get this stuff out of the way, right? No one buys a house for the roof. That's not what you buy the house for. You could have a nice roof, it could be pretty to look at, but when you go and you buy a house and you think of a dream house, you're not thinking of it from, oh, I need this roof. This is what, no. You want the other things, right? Your goals, your dreams, the accumulation of wealth is the exciting part. But don't ignore the protection piece, because if you do, it can wipe out everything else that you've built. Right? So hopefully this provides a really high level view of some aspects and some things that should be involved in your financial plan and give you a blueprint for financial success. I look forward to talking with any of you one-on-one as you have questions that we need to address. Now we're going to we're going to stop the recording and turn some time over to answer questions on an individual basis. Thanks for joining us today.